Okay, so we're talking tax today, and I'm here with Maddock May, financial planner in our office. And so, Maddock, before we jump in and talk about some of the most common issues that come up with our clients during tax time, maybe you could just share a little bit about your background and why are we talking to Maddock for tax stuff? So, who are you? What's your background?
Maddock May. I am a CPA. I have a wide breadth of experience with tax, with business owners, high income, low income, startup business, mature businesses, really a full spread there of tax knowledge.
The cocktail parties, you're just really fascinating the crowd with all that tax knowledge.
Yeah, usually people ask, what do you do for a living? I say I'm a CPA, and there's not a follow-up question. That's it. Yeah.
Glaze over. Well, for our purposes today, this is perfect. So I appreciate you joining me. So let's just kind of jump right in, and we're kind of thinking about this. What is on people's mind around tax time? And it usually kind of falls into two categories, one of which is the immediate concern of filing our taxes and reporting what happened last year. But of course, the other one is looking ahead at this current tax year and beyond as far as planning for tax-wise. So maybe that we could tackle the reporting question first, kind of looking back at last tax year. So what are kind of some of the common questions or topics that come up around reporting taxes?
One of the big ones is, do I need a CPA? And the answer a lot of the times is no. Most people earn a W-2. You can plug that into whatever tax software you choose, and it'll spit out an accurate return. Where it gets more complicated and where I would involve a CPA is if you own a business, if you have rental real estate, if you have an Airbnb or a second home that you rent out. Those are things that make a tax return much more complex, and where it may be a good step to involve a CPA. There may be deductions you're missing out on. There might be some planning you're missing out on. Those are kind of triggers. If you're just earning a W-2, most likely not worth the fee you're going to pay.
Okay, so I'm gonna throw you a tough one here.
All right.
So imagine that person who is one of those cut and dry W-2 tax filers, but maybe they just add like one of those items that you mentioned. Maybe they have one rental property, right? And they go, I'm still just a W-2, right? It's a little bit more expensive to hire a CPA. What would you say to them about the kind of the cost benefit analysis of going ahead and going the CPA route?
One of the benefits is an accurate return. You know that return is going to be filed properly, and if it's not, the CPA is backing it with their name. They will come back behind it and make sure it's accurate because they're putting their license on the line. So they will make sure that that return is accurate. That confidence is worth the fee to a lot of people.
Okay, so it sounds like one of the important components of going with the CPA is kind of they're standing with you and they're putting their name on the return alongside yours.
Exactly.
Yeah, I think a lot of people don't realize that. That's part of what goes into it, having your taxes prepared by a professional.
Correct.
Okay, so what else?
Other things to look out for this next gen is 1099s from your high yield savings account. I've seen many clients not provide these to us, and then they get a letter. I don't always know where the money is being held or where all of your tax documents are or what to even expect. With interest rates being as high as they are right now, high yield savings accounts are paying quite a bit. It's $10 of interest in order to get a 1099 INT from a savings account. Pretty easy to hit that where interest rates are today. So you're going to want to make sure you grab that from your savings account. Maybe out of practice doing that as interest rates were lower, but you want to make sure you grab that because they're also reporting that to the IRS. Pretty easy for the IRS to see that you didn't report this when they have the answer on the other side. So you want to make sure you grab that.
Yeah, so it's kind of the double-edged sword of higher interest rates. You go good news, bad news. Your savings account, especially your high-yield savings account, is actually paying a decent amount of interest. Bad news, you have to report it.
Exactly. Picking up a little bit of tax on it, but it's worth the interest, worth a little bit of extra cash on the side. Another thing to keep an eye out for is student loan repayments started again. You're going to get a 1098E for the interest you paid on that. You're going to keep an eye out for that. You haven't gotten one in a few years, most likely if you have federal student loans, because you haven't been paying, so there's been no interest. You're going to get one this year for 2023, and you're going to want to make sure you report that and get the deduction. There are income phase outs to that, so keep an eye on that. You may or may not get it, depending on where your income ends up, but definitely something to keep an eye out on.
Okay. So it's almost like there's a common theme here of like you're kind of in a routine of filing your taxes the way you have all these years, and then something changes, right? Whether it's student loan
Exactly.
repayments initiate or interest rates. What are some other common maybe life changes that would necessitate reevaluating the way we file our taxes?
A big one is marriage. You go from single filing to marrying filing jointly. You want to make sure you and your spouse are on the same page there, and also updating your W-4s. That is how federal withholding is determined for your paycheck. You're going to go in and update that.
Hey, so what are some common life changes maybe that would necessitate a tax filer reevaluating how they go about filing their taxes?
That's a great question. Getting married is a huge one that we definitely see in this next gen. Having children, getting a divorce, or even death of a spouse. Those are all huge events that definitely necessitate reevaluating your tax situation and making sure that your house is in order in that aspect.
So another question on tax forms. One of the questions we get is, am I ready to go to the CPA, or am I ready to go to the tax software? Do I have all the forms that I need? So how can someone tell whether or not they have everything or if they're still waiting on something?
That is a great question. First off, that ball is ultimately in your court. You need to know where your money is coming from, where your money is at, what's happening to your money. You need to be aware of that situation. As a CPA, sometimes things are outside of our viewpoint and we don't know what's happening. Major forms to keep an eye out on: 1099s from savings accounts, 1098 from student loans, W-2s, 1099 for dividends, interest, anything along those lines. You're going to want to keep an eye out on. So your brokerage accounts, if they're TD Ameritrade or LPL Financial or anything like that, you're going to want to make sure you log into the website and actually go to the forms and check for tax documents. Sometimes they don't mail them out. Depends on if you have mailing selected or paperless. So you want to make sure you log into every account and check for tax docs.
And so, of course, obviously, that's one of the reasons a client would choose to work with a financial planner. So if you kind of take off the CPA hat and put on the CFP hat, it goes without saying that, a financial planner will be able to assist a client in determining, yes, you probably will have a tax form from this account. No, you won't.
Absolutely. It's definitely something that a financial planner should be aware of, your financial household, and know where your money is at and what to expect in the tax season. But ultimately, if you're not working with a financial planner, you need to be aware of where your money is at.
Okay, so let's talk worst case. Let's say someone thinks they have all their forms and they go in like early mid-February and they go and file that tax return, and then they get another 1099 or another form. So what's the process there?
The process there is amending your prior return. You would just add that income, pay the tax on that income, and move on. It's not fun. It's definitely an extra step to an already not fun process, but it's not the end of the world. Ultimately, if you do fail to report anything, the IRS will also send you a really scary letter saying you owe way more than you probably do. So that will also trigger you to go back and re-amend your return.
So I know many of our clients they're on it and they're tracking everything and they're ready to go and they want to file that return as soon as possible. So it's just a good word of caution to go, what's another week?
Exactly.
Just to make sure,
Exactly.
right? But as soon as you have all those documents in, you get it submitted and get it done.
You're good to go. Yep.
Okay. So let's say get the tax return filed and we don't like the outcome. Okay. That could be good or that could be right. Maybe you got a big refund, or maybe owed a lot.
Mm-hmm.
Okay, so talk us through the process of what modifications we can make in either of those cases.
So the first step is, if you're just a W-2 employee, go adjust your Form W-4. This is what they give you on your first day of the job, along with a bunch of other paperwork, and you're blindly signing away on stuff. You filled out a W-4 when you started. This is how the IRS and payroll softwares determine how much tax to withhold from your paycheck. You fill out if you're single or married, or if you have children, any additional income, and it kind of boils it all together and spits out a number. Oftentimes, this number that this Form W-4 spits out will not cover your entire tax liability. They made an adjustment to the form in 2020, and since then it really lowered that hurdle rate for tax withholding. And a lot of people have been getting surprise tax bills. They've thought, I filled out my W-4 properly. I answered all the answers right. I'll be squared away. And then at tax season, surprise, they have a tax bill. So if you have one of those surprise tax bills, this is when you can go back and readjust that W-4. At the bottom there's just a spot where you can enter additional withholding, and you can write whatever number you need it to be in order to get you above your federal withholding tax.
Yeah, they revamped that W-4, and I tell you, we've received a lot of, how should I say, we'll just say feedback. On that, because it is very different now. It's almost like when you go in there, it feels like you're filing like a mini tax return, all the questions they ask and everything. Exactly. One thing I think people don't realize is it's important to coordinate those across the household, right? So
correct.
Both earners, right, in the household should go in and do that together and report the same information. So that's
exactly. And on that form, there's even a spot for additional income, because when it fills out that form and you mark married, the way they calculate it is if your salary is the only salary for your household. If your spouse is also working, you're going to be way under withheld and have a surprise tax bill, and no one likes that. So,
yeah, don't you find that surprise in the context of tax is usually not a good thing?
No, absolutely not. No one is surprised, good or bad. Typically, no one likes a surprise in the tax world. Another great tool when you're working through the Form W-4 is the IRS website. You can Google IRS W-4 calculator, and the top link most likely will be that calculator. You go through, you answer your income, your spouse's income, children, any other kind of additional information they ask for, and it will spit out an estimate of your tax for the year. And you can use that to then report on the W-4 how much tax you would like withheld.
Yeah, and one of those questions that they ask you is about your 401k deferrals, right? Correct. So if I'm thinking about that tax filer who gets the return back and they owe a bunch of tax, of course, one of the solutions there is go do the W-4 calculator, increase your tax withholding. But the other, which we love, is saving into certain retirement vehicles will actually lower your tax liability. So tell us about that.
Yes. So 401k is available to a lot of employees, and it is an awesome way to lower your tax bill. So at some point, once you really start feeling that hurt of that tax bill, that's when traditional 401k deferrals really make a lot of sense. If you're in a low tax bracket, 10, 12%, Roth might be a good idea. You're not saving as much money tax-wise when you're in those lower tax brackets. Once you get up there, 20, 22, 24, really start feeling that hurt, switching traditional is a really good way to lower that tax bill. For 2023, that limit for under 50 is $23,000. Another great way to save money outside of the employer space is your IRA. That's $7,000 for 2023. You can lower your taxable income $30,000 by funding your retirement, saving money, and you lower your tax bill. It seems like a bit of a win-win to me.
Right. No, exactly. Now, obviously, people have to be aware of certain income thresholds and eligibility requirements. But if that's you and you qualify, that's a great opportunity to lower the tax bill.
Absolutely. And employers also offer a suite of other great benefits that can lower your tax bill. Flexible spending accounts, health savings accounts, dependent care FSA. Those are all great ways to stick money aside and save tax. If you have a kid, you're going to be paying for daycare most likely anyway. Why not save a little bit of tax on that dollar?
Yeah. And I think a lot of people don't realize is that the contribution deadline, more so on the IRA side of the house, is actually all the way up until tax filing for the previous year. So if you kind of run your numbers and you're like, I don't really like the way that looks as far as how much I'm going to owe, you can actually still make that contribution for last year.
Exactly.
Yeah. Okay. Any other ideas? Tax wizard, how can we lower our tax bill?
And that is the golden question. One of the most surefire ways is to make less money. That's typically not the way you want to go.
But no, it just goes to show too of that. And again, you're just humming along, doing your tax return the way you always have. But a change happens, right? So you mentioned, what if I'm now earning more money, right? What if now I'm in a higher tax bracket and I've been contributing to Roth? Maybe the change is just how much money you're earning, right? Or either as a single filer or as a married filing jointly. If you're earning more and you're into those higher tax brackets, you want to evaluate where you're saving. Okay, so for someone who had a big tax bill for 2023, what's another piece of advice, I guess, that you would just share with them to remedy that moving forward?
Yeah, moving forward, you're going to want to make changes. All things considered, if you're going to make the same amount of money or maybe a little bit more the next year, you will also have a big tax bill if you do not make any changes. So that should absolutely be a trigger to you to go adjust your W-4, increase your withholdings, potentially make estimated tax payments in order to prevent that surprise tax bill at the end of the year.
Yeah, because that's not going away, right? Unless for some reason 2023 was an anomalous year, you had something going on. If it's status quo this time next year, you're going to be looking at the same situation.
Absolutely.
Okay, so you mentioned estimated tax payments. So that's another piece that we get a lot of questions on. So let's say at some point during 2024, you have a big taxable event. Sell some stock, sell a rental property or something. How should people be thinking about reporting that for next year's tax return?
So the tax for that is going to be due pretty much immediately. If you underpay tax during the year, there's actually a penalty. So you're going to want to immediately take whatever income that is and pay tax on it on the IRS website. It's fairly simple. Google estimated tax payment. They make it easy to give them money. But it doesn't even have to be a big taxable event. A lot of people have side hustles these days. They drive for Uber. They do branding on the side, do a little bit of graphic design. That's taxable income that most likely you're not having tax withheld on. You're going to want to go ahead and make those estimated tax payments in order to stay ahead of the curve on your tax and prevent any big surprises.
Right. So you've got to either incorporate that into your W-4 or you got to make those estimated tax payments.
Correct.
Yep. Well, Maddock, I certainly appreciate you joining us today to talk about tax. And I know it must feel different this tax season, not actually being in the trenches, filing the taxes.
Definitely a little different. I'm enjoying being home with my family at a reasonable hour every evening. But yeah, glad I could help.
Nevertheless, appreciate you joining us, sharing your tax knowledge. And of course, this video is not intended to be exhaustive. Okay, so there's no way we could possibly cover every pertinent tax detail here, but this kind of gives you an idea of some answers to common questions. If you guys have any specifics, reach out to us. Certainly reach out to your tax advisor as well, and we'll see you next video.